Thank you very much. So selling options premium to market trends, that's the topic for today. I think this is very appropriate for the current market condition as the market sold off. Volatility is back up. VIX is approaching 20, which we haven't seen for several months. So it's very important to kind of have a specific strategy that you can execute in order to take advantage of the market volatility. And that's what we want to talk about it today. So first I want to kind of just, this is me, Vlad Karpel. And for those of you, let me just make this a little bit smaller. Just give me 1 second. I want to make sure that. Perfect. Okay, I hope this is better. So this is me, Vlad Karpel. As Kevin mentioned, I was Executive Vice President, Head of Technology at Options Express from its inception. And my passion is to work at, have several hedge funds and startups here in Chicago. I've worked at Options Express as a CTO, and for the past 3 years, I started at Tradespoon, and I also been a consultant to several hedge funds in Chicago. My passion is to teach Tradespoon subscribers how to trade stocks and options, and I do have a master's degree in computer science. My background is artificial intelligence and building algorithms to help learn on data and make decisions, forecasting prices or forecasting key levels for any stocks or any assets that are trading on exchanges. That's my background. So Tradespoon gives me an opportunity to kind of combine all my passions into one. Some of the risk disclosures I'll be showing screenshots of Trading Block where I trade every single trade recommendation that I make from Tradespoon. It's a daily service. We provide you with stock, options, and ETF recommendations on a daily basis. And I'm going to show you some of the screens. So keep in mind that I do have a relationship with Trading Block. And I am not a financial advisor. You should consult a financial advisor before making any trading decisions. The information in this presentation is provided solely for general education and purposes only. And just keep in mind that some of the names that I will mention during this presentation, team at Tradespoon and myself might have a financial interest in those names. So now that we got the disclosures out of the way, let's talk about common obstacles. Leverage capital is the first challenge that I had when I started trading on Options Express and managing my own money. How do you participate in names like Google, Priceline? Once you enter into a trade, the second challenge that I had to face is how do you trade during volatile market like we had yesterday and today? This whole year, market S&P 500 has been in a range. So how do you apply technical analysis and how do you find the tools that can help you find the key support and resistance levels? And the frustrating part for me was that I could be correct on the direction of the market and I can be correct on stocks, the timing. Let's say, Expedia or Amazon had a great earnings. They're going in the right direction. I'm long Expedia or I'm long Amazon, and all of a sudden the short-term volatility like we had in the past 2 days, my stop orders get triggered and I'm losing money, and then trading becomes kind of you chasing the market. It becomes a speculation. And if you don't have a written down trading plan that tells you exactly how much money to allocate into every single trade and when to close your position, when you take winners, when do you close your losing trades, if you don't have specific trading plans with specific numbers, you tend to chase the market, and trading in a market like we had in the past 2 days can be extremely frustrating. So how do we avoid that? So at Tradespoon, we built a system that relies on quant models, relies on computers to analyze data and make predictions for stocks for the next 5 minutes if you're a day trader, or for the next 50 days if you're more swing trader or medium range trader. And the idea is that we are following options expiration cycle. So whether you trade in weekly options for today or you trade in a monthly options that are 50 days out of the money, then this is the technology that we provide. So we provide you with daily list of stocks to trade based on ranking price forecasting. We also provide you with a stock recommendation that we trade a Trading Block account, and we're showing you seasonal charts with trend predictions. So in order to be a successful trader, you have to follow these 3 steps, right? The first, you need to know what you're trading, whether you're a day trader and you're trading Netflix, Apple, or one of you, Chris said he's trading VIX. You got to know how the underlying asset is trading. So when the market sells off and VIX jumps to 20, if you trade in the VIX, then you know how to find the key support and resistance level for VIX. If VIX has been trading between 12 and 13 and now jumping to 20, reaching, maybe reaching 24 level, you might consider that this is an overbought. VIX is an overbought condition, and as we revert to mean, as the market settles down and volatility collapses, then VIX will drop. You gotta live through several cycles where VIX volatility is going up and down. So learning the assets, so if you're trading Apple between the earnings or after the earnings, you have to know how the underlying assets is behaving in different cycles. So for that, we have that's the first step to be successful. The second step, you gotta have knowledge of direction of the underlying stocks. Whether you trade weekly expiration that expires, weekly options that expires today, or you trade in longer term horizon, options that expire 30 days from now, you have to have sense of time and sense of direction, whether the stock is going up, down, or will trade in some kind of a range. And for that, we build the seasonal charts that I'm going to show you shortly. And the third tool is, I'm really excited to actually present, is the stock forecasting toolbox. I think this is the first time I'm presenting this to Real Trader webinar community, so I'm excited about this. And this tool is one-of-a-kind tool that shows you predictions for the next 5 minutes and for the next 10 days. So let's go over these tools. And so this is the first tool, predictive models, and Tradespoon Scoop. So if you're a Tradespoon subscriber, you can go to tradespoon.com and go under quick navigation and click on Tradespoon Bulls. So today we're going to talk about how to sell stocks into market strength when the S&P rebound. Even though S&P has reached its lows, it has rebounded right now. So we are under 200-day moving average. We closed it several times. So let's look at the chart for a second. So if you look at the charts, we crossed below lower Bollinger. If you look at the Bollinger Bands and you look at the S&P, we crossed 2 days in a row below lower Bollinger Band, and this is 2 standard deviations away. So in statistical terms, and we're going to talk about statistics throughout this presentation, we crossed below lower Bollinger Band several times. This happened today. This also happened in July during the Greek crisis, and then it also happened last October, right? When we had a sell-off last October, we closed several times below 2 lower Bollinger Band, and statistically speaking, that means 96% of the time the stock market will rebound back, and that's kind of the campaign that's been formed right now. Some of the people are saying that, well, even though the problems in China, they are temporary, and even though the PMI is down and the productivity is down, still, second largest economy, and they're expanding. So you have 2 campaigns being formed. One campaign says, well, statistically speaking, we will rebound. Probably maybe not today, but in the next week, the market is oversold by any technical indicators that you use. So there will be a rebound, and if there will be a rebound, you need to be ready and know which stocks or which indexes you want to trade if the stock market will rebound. On the other hand, there's a campaign that Greek Prime Minister signed. There's uncertainty about China and the market. It has the highest in developed countries. And there's no support right now. The support we might be reaching, 1999 level or October levels in the next, week or two. So you have to campaigns, and whatever your campaign is, you gotta have a direction. You gotta have a sense of whether you're in bullish campaign or bearish campaign. Then you need to have the list of stocks to trade. So if you're in a campaign like I am personally, where I think we're still going to trade in the range, and this is just August, volatility is high, a lot of people are on vacation, low volume. So if you think that this is a short-term healthy correction of 5% or even 10%, then you need to have a list of stocks to trade, and that's what that's the first tool that we have. So the first tool is Tradespoon Bulls. If you go under quick navigation and you click on Tradespoon Bulls, you see a list of stocks that we believe will outperform the market and outperform its peers in its group in the next 50 days. So we have a model specifically designed to follow options expiration cycle and basically tell you trade October expiration. And here's the list of stocks in different sectors: healthcare, internet. You see Expedia, you see Signup, you see home construction sector. These stocks will outperform the market in the next 50 days. So if you think by October we'll have a rebound, then you participate in a name like Expedia. So let's say Expedia beat the earnings and they had a nice healthy 5% correction right now, and you want to buy October expiration. The second step, you're looking for direction, right? So you go to analyze seasonal chart, and when you go to stock forecasting toolbox, when you go to seasonal chart, you basically see that our predictions based on the models, this chart shows you 3 different pieces of information. One piece of information, and somebody said the audio is bad. Okay, perfect. Audio is better. Thank you. Sorry about that. So one piece of information is that Expedia. We have 3 pieces of information. One piece of information is our quant models. It basically predicts, it asks the question, will Expedia be higher between now and next 50 days by October expiration? And here the model basically says, yes, it will be higher. And especially for option trader, if you're selling premium, especially when the VIX is at 20 levels, selling out of the money put spread on the strong names makes sense, right? The stock is at the discount. It had a nice correction. It approaches 110 level. And our prediction by October it will be higher. So that's the first piece of information based on our quant models and based on how we've been following expiration cycles for Expedia for the since its exemption since 2005. We see that Expedia will trade higher. And let's make this a little bit. All right, just wanted to make the screen higher so you guys can see it better. So, and can everybody see the slides? Is the audio better? Just tell me if you can see the slides. I want to make sure that you can actually see the screen. So I'm showing the seasonal chart, and right now you see 20-day, 30-day, 40-day, and 50-day forecast. And for Expedia, we see that the support, 10-day support is at 108. And 10-day resistance is at 133. So we see that volatility expanding, and we're showing the key support for Expedia. So if you want to sell October options, one trade is, you can sell 105 put, right below that support, or you can sell 110 put spread, sell 110, buy 105 put, because the model shows you that in the next 40 days, 50 days, the Expedia will be higher. The support is at 108. And that's the second piece of information. So the first piece of information, it's higher. The second piece of information, for the next 10 days, the support is 108 and the overhead resistance is 133. And the third piece of information is this green line. It's a seasonal chart. So it basically shows you that Expedia, this is the current year, and you can see that the current year Expedia has been an uptrend, and historically, since its inception, since they went public in 2005, Expedia has been trading. If you take the average of all the year, Expedia, this is the green line, has been growing in this upward momentum. You can see that by the beginning of October, it's going to make new higher highs. And even though it sells off traditionally in the middle of the August, like we have right now, starting on October 21st, from seasonality perspective, it makes another leg up going to the end of September. So trading October expiration makes sense based on 3 pieces of information. One is the seasonal chart. That's the first model. Second model shows you 10-day support and resistance. And the third piece of information shows you our prediction of the stocks to the upside. And you can type in any symbol or any ETF that trades on NASDAQ and New York Exchange. Now, if you want to trade this, you can go to Stock Forecast Toolbox. And under Quick Navigation, you go to Stock Forecast Toolbox. And then this piece of information shows you how to manage how accurate these predictions. And Terry had a good question, how accurate are these predictions? So first I typed in spider, clicked on go, and clicked on short-term prediction. Let's do it again, Stock Forecast Toolbox. Let's type in spiders, click on short-term prediction. It basically shows you that based on the 10-day prediction, the spider is trading in this range between 205 and 210. And then if you click on intraday prediction, short-term prediction is 10-day prediction. The intraday prediction is prediction for the next hour. So it basically, each candlestick here is a 5-minute chart. So each candlestick shows you 5 minutes, and it shows you what happened this morning, right, as the market opened at 8:30 and 8:49, what were our prediction. And now we're making prediction for the next hour. Based on the seasonal chart, it basically shows that right now, the low for spiders is 201.76 and high is 202.41. And you kind of see that we're seeing that market is kind of reaching the bottom. It's sold off. Now it kind of rallied back up as I speak. So right now, model sees that there is a short corridor support from 201.76 to 202.93. And then Terry asked a great question. What is the accuracy? What is the accuracy of this prediction? And do me a favor. How many of you actually see the screen that says predicted data for spider next hour? Can you let me know if you see it? Just type in yes. I can see the screen. I want to make sure that you guys can see the screen. Perfect. Okay, so you guys can see it small. So let me make it bigger a little bit. All right, so hopefully this is a little bit bigger. So now you're basically seeing that if you want to trade, if you're trading right now and you're trading, weekly, spiders that expire today, weekly options, that it gives you a comfort level that shows you that for the next 5 minutes, spiders will be trading, and spiders right now it's 202.64, between 201.76 and 202.41. And right now, market did rally, and the spiders is at 202.62. So it's kind of overbought condition, right? Because we are predicting this range, and Terry asked, what is the accuracy? And the accuracy is very high, 99% accuracy. So over a long period of time, so over a long period of time, the accuracy is very high in predicting these low and high intervals. So we are predicting that for the next 5 minutes, spiders will be 201.76 and 202.41. And as the spiders approach, and market is very volatile right now, and as the spiders approaching 202.60, actually, short term, it's an overbought condition. So if you're a day trader, you might consider, selling, especially into a market, market has been under pressure. And as long as there is no institutional buying and the market reversal, most likely short term, the market is overbought. And you want to consider kind of selling into a strength and hedging your position. And you can do the same thing analysis with Expedia. Let's say we don't have time to day trade and we want to consider our Expedia recommendation long-term October expiration, then you can actually type in Expedia, look at the short-term prediction. Here, each candlestick is 1 day worth of information. So you can see that we're predicting that Expedia today will be as low as 117.41 and as high as 122.48. And going into the next 10 days, we don't see Expedia being under pressure. We see it kind of being in the range, right? In the next 10 days, we see Expedia being between 122 and as low as 117. And again, if you want to consider when to enter this position right now, you can go to intraday prediction, 1 hour prediction. And here we have a much more close information. And again, we're seeing that Expedia in the next 5 minutes will be trading as high as 118.60, for the next 20 minutes, and as low as 117.49. So every time Expedia approaches 118.16, that's an overbought condition. You might consider selling an option, or this is, it's approaching 117, this is oversold, and you might want to go long. The power of this analytics, unlike any other tools out there, that this is a real-time predictions, right? We're in Chicago time, we're in Central Zone. Every time market trades, there's a swing in the market, every 5 minutes we're getting new data. And we're making these key support and resistance prediction real time, and real time it adjusts. So if you're a trader and you want to look at these predictions and see what the key support and resistance levels are, you can basically go in and look at that. This is an overhead resistance, right? This is a key overhead resistance level. And here's the support, right? Since this morning, Expedia kind of been trading in this 116, 119 level. So if you want to be market neutral, you can sell a counter, right? You can sell 119 call, you can sell 116 put spread, you can sell 119 call spread. You can do it weekly options if you're a day trader, right? Or you can do it, next week option expiration. But real time, we're making predictions for key support and resistance level. And in order to be a successful trader, you have to make sure that you're making these predictions real time and you can find the support and resistance levels. So once you find the key support and resistance levels, how do you take advantage of that information? So we talked about, price forecast still being real time, running by independent models. It shows you support, it shows you resistance levels, but then you need to design a strategy. So we talk about selling to a strength, right? Spiders, S&P rallied it was as low as 2012. Now it's at 2023. It's a 12-point move. And short term, if we're looking for the next 15 minutes, if we're looking for the next hour, market is overbought, right? You want to sell into a strength. We've been several times under 200-day moving average. There's a camp being formed that we might be in a correction and we are due for 5-10% correction in the market, especially with all the uncertainty with interest rate. So if you're in a campaign where you want to protect, especially if you have long exposure to the market, if you want to hedge yourself, you want to leg into a cover call or you want to leg into your spread, this is an opportunity to sell into a strength. So selling into a strength is a proactive trading strategy carried out by selling out of a long or into a short position when the price of the asset being traded is still rising, but expected to reverse in price, right? We just saw this analogy. We are looking at the Expedia. Let's see if predictions have changed. So let's look at the Expedia. Perfect. So Expedia at 118. So let me just type in and see what the Expedia is trading, so I can be more accurate. So Expedia is 118.20, 118.22, right? So if I go back here and type in Expedia. So right, so last print is 118.20, 118.21, and our prediction is that right now we're kind of in the middle of this range, but as Expedia reaches 118.55, based on this model, this is an overbought condition, right? And we think that in the next hour, it'll be in this kind of range. So selling 119 call or selling 120 call that expires today might be a good opportunity. So then you are selling into a strength. Buying into weakness is the opposite approach, right? If S&P is in the midst of a pullback from multi-year high, there are two camps being formed. One side believes that this is the beginning of the end of the current bull market. The other argument is that the current pullback of around 4-5% that we've been experienced today and yesterday is merely a normal and healthy sell-off that occurs during even the strongest bull market. I personally fall into the later camp. I think we're just reaching a range, and ultimately we're not going to have beyond 10% pullback in the market. So approach is that many traders will wait for confirmation of a change in the price movement before reacting. However, by the time a reversal is confirmed, it may be too late and the trader may end up losing. So those by trading against the prevailing trend in anticipation that it will soon reverse, the trader allows himself or her a greater margin of safety. So the approach is you want IV volatility increase, just like we currently have. If VIX goes from 12 to 20 in a matter of a couple of days, this is a great opportunity to start selling out of the money options because there's uncertainty in the market and you have a lot of premium for those options. You are looking for 3 to 5 price correction in 5 days, and that's what we experienced in the past 2 days, right? A lot of the stocks that we've been following that are on a bullish list, like if you go back to Tradespoon and you look at our bullish list, you basically see that stock like Expedia, Cigna, LLY in healthcare, or Skechers, Home Depot, they have been under pressure. They've been selling, some of them, like Skechers, sold 6% today. So this is opportunity to kind of sell in these out of the money options, where you see 3 to 5% move correction. And you got to use some kind of a technical studies, right? You have to find key support and resistance levels are. So if you day trader, you look at the you look at the 1 hour forecast, right? You see what will happen between now and the next hour. And you can use traditional technical analysis, or you can use technology that we've developed at Tradespoon. Traditional analysis, you look at the trading block, or you look at the chart, like Expedia. You see that Expedia made a nice rally after the earnings. It sold off. It kind of, here's the support. So let's look at this support level. So you're looking at the support. It's around 115 level. If you draw the line here, it's at 115 level. So this is an opportunity to, consider selling out of the money put. Sorry about that. So that's the support that we're seeing at 115, and that's what traditional analysis. So finding the support and resistance level real time using real time tools is very important. So, most of you are familiar with the basic support and chart analysis. So here you see support and resistance, and you're looking at the candlestick chart. This is the chart that we've seen using the stock forecast toolbox that I showed before. You do want to look at different pictures, right? If you're a day trader, you want to look at 5-minute candlestick and 15-minute candlestick. If you're a swing trader, you might want to look at 15-minute candlestick, and you might want to look at 1-day candlestick. But you want the pictures to have the same pictures, right? You want the trend to continue. So this is an example where SPX is sold off, and we're seeing kind of in correction mode. If you look at the daily chart, right? This is an uptrend. You see the uptrend, the red line, but then you're seeing a sell-off, kind of that we're experiencing right now. But if you look at the shorter term 30-day chart, you basically see that S&P is under, in the bearish condition, and it's selling off. So it's very important to make sure that you are looking at two different pictures. And this is why if you trade in, let's say, Expedia, right, that we said, you want to first look at the short-term prediction. And the short-term prediction that shows you that we're kind of in the range, right? We're between 117 and 122 for the next 10 days, right? This is each day prediction shows you low and high for August 21st, for August 24th, for August 25th. This is our prediction. So we're looking at the daily chart, right? We're seeing 2 months worth of information on this chart. And then when you click on intraday prediction, you are looking for each candlestick is only 5 minutes. Each candlestick is 5 minutes, and it shows you that right now, again, Expedia remains in the range between 118.20 and 118.58. As low as 117.66, right? That's the range that we're showing, and that's currently where Expedia is. So short-term Expedia, as the market sells off, it's oversold. So what short do we trade? What are we selling into a strength? We're looking for overhead resistance. So let's look at the examples. At Tradespoon, we're very transparent about our performance. So if you go to Tradespoon, let's just go through a specific example. Unlike most of the services out there, we actually, every trade we recommend, we are showing on our performance page. So there's a lot of services out there that will tell you basically, they'll give you a lot of trading ideas, right? And then it's the ownership is on you to decide which of those trade ideas make sense, and then you can follow them. And if there's 5 trades a day, you might not participate into the 5 trades, but you have to go and find which trade to follow. And that's challenging, especially if you're new to trading, to figure out which trade to take, especially if you're in day trading. We are basically very transparent in our services, and every trade we recommend, we are showing you what actually happened. We tell you at what price we got in and what price we get out. And if it's a losing trade like MDT, we are showing you that we lost money. But if it's a winning trade like F5, we're showing you the winning trade. And we're showing you every single trade we made 675 recommendations in the past 3 years, right? One trade recommendation a day. It's been recorded, and we are showing you the results of how many winning trades we have, how many losing trades we have. We are averaging 70% success ratio, how much money you're making across all the trades, and what the percentage return if you're doing spread trade or if you're doing option trade across all winning and losing trade. So this is very unique about our services, that we are stand behind our product and we actually showing you what our results are. So let's look at the latest one, F5. So we made F5 recommendation on July 24th, and we just closed it August 17th, right before the market sell-off, and we made 25% return. So the trade lasted 3 weeks. On average, our trades last 3 to 4 weeks. We made 25% return on our trade. And what kind of strategy did we execute? We bought a stock. If you're a stock trader, some of our subscribers just trade stocks, some of them just trade options, or a lot of our subscribers trade spread. So we sold 125 put, we bought 120 put on July 24th, and then we're showing you that when did we sold it for $1.60. We did it on July 23rd. We sent you an SMS message, and then we bought this trade back on August 17, and we got filled for 75 cents. So we did a credit spread. We took advantage of the volatility, and we closed this trade. So since we're talking about selling into a strength, having a short trade, let's look at the Las Vegas Sand. So before that, we did a short trade, Las Vegas Sand, and we basically took advantage of Las Vegas Sands being in overbought condition. So this trade we entered on July 30th, and we just closed it on August 17th. And we did 24% return on the spread. So this is an example where you would sell into a strength. You look at the chart. So when did we do this trade? We did the trade on July 30th. So on July 30th, and this is July 30th, and we're here, we see that LVS kind of was in overbought condition, right? It reached $55. You see this retracement here, and we've seen that this is an overhead resistance around, $56. So we executed this trade on July 30th because we saw that this is kind of a tapping conditions, and after we executed this trade, based on our prediction, LVS actually did sell off, and then we closed the trade on August 17th, right as it reached 51.5 level. So again, how did we make that decision? One is we're looking at traditional technical analysis, and we see that Las Vegas Sands was in overbought condition. Then we're looking at Tradespoon proprietary information, right? At the time we made the recommendation, all our predictions were lower. Now the predictions have changed. After we exited the trade, as Las Vegas Sands is actually bottoming out and it's reached its bottom. But at the time we made this recommendation, this number was low. It's 3, meaning that we are bearish on the stock, and our overall buy-sell rating based on technical and fundamental analysis was 6. We're also looking at the implied volatility and demand for the options. So we're seeing right now, this is real-time data, if you want to sell 55 call, there's an 80% probability that Las Vegas Sands will be staying between 40 and 55 range. As implied volatility is elevated, and let's say you still want to get into this trade after the sell-off, and you think that Las Vegas Sands is going to continue to sell off, you can basically sell 55 call as a bearish trade, and with an 80% probability, the stock will be staying in this range between $40 and $55 by October expiration. So you're looking at the implied volatility, you're looking at the demand and supply for options at the money, and based on implied volatility, you have high probability that says that you can sell 155 or sell 40 put if you're trading options. So this is very important because you want to make sure that you structure your trade correctly and select the right strike prices. Because finding the direction is important, and finding and having direction on the stock like Las Vegas that it's under the pressure, it's very important. But it's also very important to do strike prices selection, and you do strike prices selection by selecting, by looking at the supply and demand in the market, and you can use options delta as a proxy for probability of success, or you can use a probability calculator that can tell you that if you're bearish, you probably want to either buy 55 put if the volatility is low, or you want to sell 55 call, right? You want to sell 55 call because you know there's only 10% chance that Las Vegas Sand will reach 55 level in the next 50 days. So that's the next step in your thought process. If you are selling into a strength, if Las Vegas Sands rallies and you sell into a strength, you want to make sure that you find the proper strike prices. So let's recap. We do provide daily recommendation. And in this example, we went through an old trade like Las Vegas Sand. We're showing you the trend, right? We're showing you our predictions based on the neural networks. We also show you the rating. And then at any time, you can go to stock forecasting toolbox, which is a real-time prediction. And you can type in Las Vegas Sand and look at the short-term prediction. And it will tell you that for the next 10 days, we still see that Las Vegas Sand is under pressure. So if you're in a campaign that the market is going to be in a range or continued sell-off, this is an opportunity to sell Las Vegas Sand, sell that 50 or 52.5 call spread, because in the next 10 days, it's going to be under pressure. If you're a day trader or if you're managing position intraday, you will go to intraday prediction, and same analysis, you would look into chart and you would see that there is an overhead resistance at 48.5, and the support is 47.5 for the next 10 days. So if you want to go short, you probably want to wait till Las Vegas Sands reaches 48.5 level, and that's when you would sell an out of the money call. So that's an example of a short position where you would sell into a strain, right? If you look at the stock forecasting tool, or if you look at any other technical indicators, and whatever technical indicators you love, whether it's RSI, whether it's MACDs, whether it's Bollinger Bands, you look at the technical indicators, you see that the market is in overbought conditions short term, then you execute a short position. So what is the mechanics of the trade? In the example that we recommended a credit call spread, right? If you go back to our trade that we executed on July 30th, we did a credit call spread, right? We sold 55 call for Las Vegas Sand, and we bought 60 call as a hedge, and we received $1.50 credit. So we received $1.50 credit. Our maximum loss was $3.50, but our probability of success is 68%, right? We're targeting to be 70% accurate when we do our trades. And if our losers equal the amount when we lose is equal to the amount when we gain, then we know that 1 out of 3 trades is a winner, right? 2 trades will be a wash, but 1 trade will be profitable. So if you can make 20-30% return in 2 weeks, in 3 weeks, that's a great return. And that's our target. So it's 68% gain. And we structure our trade by selling 55 call and buying 60 call. And notice what is the profit loss chart looks like. Very important to understand this. If Las Vegas Sand sells off, that you can see here, and let me see if I can. Right, so if Las Vegas Sand sell off, this is our maximum gain, right? It's a bearish position, right? We want this, we want the Las Vegas Sand to sell off, right? Right? We want it to sell off. That's our maximum profit. So the downside of the spread strategy is that you're capping your losses. If Las Vegas Sands goes to 0, well, the most you can lose is the $1.50 that we receive the credit. But on the flip side, the same thing, we are capping our losses, right? If we're wrong, and let's say market rebounds, and Las Vegas Sands reaches above $55, well, we're capping our losses here, and that's the profit loss calculator. And somewhere in between, depends on how much credit you receive between those strike prices, is where your maximum, your break-even point, right? This is your strike price. In case of Las Vegas Sand, this was a 55 call, right? Our maximum gain was at 55 strike. So this was 50. Let's go back here. This was 55 call. This is the maximum gain. And our hedge was at 60 call. And since we received $1.50 credit, then our break-even point was roughly 56.50. Not roughly, but exactly 56.50. Right, that's our break-even point. So it's very important to understand, especially if you're new to trading, to option trading, you need to understand these key support and resistance level and what is your break-even point. So your break-even point is 56.5, but you sold 55 call, and as long as Las Vegas Sands stays below 55, you're making money. On the flip side, if this Las Vegas Sands go above $60, let's say they make an acquisition or economy in China recovers and everybody goes on vacation, great. Then all of a sudden, Las Vegas Sands goes above 60, you're capping your maximum loss at $3.50. You can never lose more than that. So, and since we do have another 12 minutes, I'm gonna, right now is the perfect time to enter any questions that you might have. I have next 15 minutes to finish the presentation. I do want to make sure I get a time to answer your questions, present you with an offer. And so please, I want to know how many questions out there. So just type in your question and I'll make sure that I'll address all of them. And since I do have 15 minutes, let me go now through reversal. Let's say, where's the market right now? Let's go back to where the market is. So last time we looked, let's continue with the Expedia example. So right now, well, market is under pressure, right? SPX sold off, Expedia sold off, and now Expedia reached just in the past 10 minutes that we talked about, 116.89 level. You go back to your stock forecast toolbox, you click intraday prediction. Oh, that's not Expedia, that's Las Vegas Sands. So let's type Expedia. Let's do intraday prediction. So for the past 20 minutes since we talked, Expedia, market's corrected, Expedia sold off, but we're seeing that 116.98 short term for the next hour, if the market continues the way it is, that 116.98 is an opportunity to go long, right? You can do a credit put spread. You can sell 115 put and buy 114 put for Expedia. So how do you structure this trade, right? Expedia just reached once, as we said, it's looking for this 115 support, right? So as soon as it reaches this 115 support, and that goes back to June, the high of June, there'll be immediate rebound. So if you want to structure the trade and sell 115 put that expires today, and maybe it's not actually a bad idea just to do this trade, that's what you would do. You would go to trade, option, and you would sell that 115 put. So let's talk about the structure of the trade. How would you do this? So let's actually go through a specific example that we actually did. So the last bullish trade was F5, right? We talked about F5 as the last bullish trade. And again, we're keeping track of every single winner and every single loser that we have. And we just closed, a couple of days ago, F5. So let's go through the mechanics of the pick. This is a recommendation that happened on July 24th. On July 24th, we see that F5 made earnings announcement, it sold off, right? Just like we see the Expedia. So this was an opportunity to go long. So at this point, we sold 125 put, we bought 120 put, and market and F5 did rally back up and reached 133 level, and that's when we closed our trade, right? So if you look at our working orders, we send SMS messages to our subscribers, we sold net credit for $1.60. We sold 125 put, and then we bought it back for 75 cents on August 17th. And again, what was the rationale? We looked at the probability calculator. Again, at that point, trend again was higher. And it was high, like it is right now. Right now it's only 6, but at that point it was 9. And these numbers do adjust as we get on daily basis as we get new data. So the probability was high based on our analysis, and our buy-sell rating was 10, and we saw that F5, like it did today, it sold off all the way to 125 level, right? If you look at the stock chart, F5 right now it's at 125. It's right where 50% retracement is. So if you're in campaign where market is oversold and F5 is oversold, and you can actually sell 120 put probably now, before the earnings announcement, then you would go through this mechanics of the trade based on our probability calculator. You see that reaching 110 level is only 15%. So if you sell 110 put, only 50% chance that by October, in the next 50 days, it will reach 110 level. So you can sell 115, 120 put, depends how comfortable you are with the risk level for your trade. And the mechanics of that trade that we did for September expiration, you would do the same thing for October expiration, is we sold 125 put, we bought 120 put, and we received credit of $1.60, right? We received credit of $1.60 on July 23rd, and then on August 17th, we close our position for 75 cents. So that's the mechanics of the trade where you want to go long, right? You find the price support, whether you look at 50% retracement at F5 or you look at the stock forecasting toolbox at Tradespoon, whatever your technical analysis is, you find that key support and you go long. And the beauty of the options is that you don't really have to be exactly correct whether F5 will be at 125, 123, 120. As long as it stays above 120 and you sell in 120 put, you're making money. So that would be the process that you would undergo. So that's the mechanics that we pick. This is we did the F5 example, same thing. And Apple is a very favorite, you get a lot of buzz in the news for Apple, but that would be the mechanics of the trade. And again, it's very important to understand the profile, right? You look at the IV rank. We talked about implied volatility. If you go back right now to Expedia, and you look at the volatility chart, very important to keep in mind the numbers, right? You see that implied volatility yesterday was 32.20, and the low is been as roughly as 20. So implied volatility is above 50%. The IV rank is above 50%. And today implied volatility spike even more. So it's probably approaching, close to 35, 36 level. So since implied volatility is high, this is the time where you want to sell options because you're getting enough premium for that. So IV rank is important, but then structure your trade, you're seeing that here, unlike short trade, the long trade, you benefit from price appreciation. So you have your maximum gain here. Well, if the F5 go up to above 125, that's your maximum gain in the previous example. And your maximum loss is at 120 level. Right, if we go back to our F5 analysis, our maximum gain for F5 was 125 because we sold 125 put. And if we were wrong, if F5 continues sell-off along with the market and drops below 120 level, then our maximum loss is $3.40 because we have our hedge at 120 put. So position maintenance, it's very important to always close your position within 15 days of the expiration, or it has delta of 5%. If there's only nickel, a lot of people ask me, why not, if I only have a nickel, why do you close the trade or you only have 10 cents? Well, A is for the short-term volatility like we have now. It's very important to have a trading plan because we closed F5 and we send the recommendation to our subscribers. I'm sorry? You guys can hear me? Can you guys still hear me? Just type in yes if you can hear me. Perfect. But the idea here is that you have to be disciplined. So we're looking for 25, 30% return, and we close our position on August 17 for 75 cents. One might have said, well, why didn't you wait and for more profit because F5 is going up? But well, because of the situation like we have right now, the closer you get to expiration, the higher the gamma of your options start behaving as your stocks, right? They have very high correlation. You have high delta on your options, and all of a sudden, a winning trade becomes a losing trade because F5 sold off and reached 125 level in a very short period of time, right? We see that F5 dropped from 133 to 125 level. So it's not, you can't trade based on hope or based on subjective analysis. You have to be very objective, and you have to basically execute rules based on your trading plan. You have to get in at the time based on your trading plan, and you have to get out of the position. So if your goal is 30% in 3 days, in 30 days, you have to exit that position when you reach your goal. If your goal is 3%, you're day trading and you want to get 33% return on your money within 15 minutes, that's the signal when you want to get out of, exit the position. So we talked about the trading plan. So our trading plan that we execute at the account that I showed you, a trading block, right? This is an account, a trading block. Every single trade we execute, you can actually see a video. We show every trade that we make, and you can actually see our performance, right? Every single trade that we do, we're very transparent. There are very few services out there that can actually show you every single trade that they've done and what the returns were. So we show you every single trade that we make, and we're managing a portfolio of, our assumption is $10,000, right? We're managing a portfolio of $10,000, average retail account, and we're allocating no more than 5% of your money into any given trade. And we execute this account, a trading block, and if you go to our backtest results, a lot of people ask us, what are your returns? Then since the inception, you can see if you start with $10,000 using the spread, then you can actually see how your portfolio will grow to, $56,000. This is not an indication of what the future, right? This is a backtest. So we basically made assumption, we trade with $10,000, we take every single trade, one trade a day, you might have as many as 22 trades a month at any given trade, and we allocate $500 into any given trade. So we're not taking into consideration commissions, we're not taking into consideration slippage, but we're building a trading plan, and we're showing you the trading plan. We're showing you what the potential results are, and past performance does not indicate the future results. But the most important, we're giving you a trading plan. And you can go back to any single trade we've done, let's say Monster Beverages, you can click on that trade and look at what was the return on capital, what was the probability of success, what was the estimated move, and then you can make assumption you trade. So, wow. And we also we also provide you with the instructional video, right? If you click on the instructional video, then you can actually watch how we did this trade, what the mechanics of the pick is, and how to actually execute this trade in our brokerage account. So this is a great instructional video that you can watch on a daily basis. So every pick is come with SMS message, email, instructional video. So we do have we want to say thank you to Real Trader Webinars, Mark and Kevin, for providing this opportunity to be at this webinar and share some of the technology we build and our portfolio management and how our team at Tradespoon of professional portfolio managers are actually managing this account. So we do have a special. I don't know if Kevin can show that, but if you go to Real Trader Webinars Tradespoon Special, let me see if I can make this bigger. And our regular price is $97 a month. We never do any promotions. This is our regular price. When we do have a webinar and we have an opportunity to speak to people who join our webinars who want to learn how to trade, we do want to give an opportunity to trade. So we have a special that for $17, 82% discount over a regular price. For the first month, you only pay $17. So if you sign up right now, you will only pay $17. It's 82% discount. We stand behind our product. We give you 30-day money-back guarantee. For any reason you want to cancel, you'll cancel it. And then going after that, it's $97 per month. If you want to do annual subscription, you get over 40% discount per year. You still pay only $17 a month, but then for $697, which is regular price is $12.61, over 40% discount, you're able to have access to our nightly videos, our stock forecast toolbox that we went over today that gives you real-time prediction or 10-day prediction, our seasonal charts, but most important, our evening videos that you can follow, and you can follow our trade recommendation. You can look at our performance page and see how well we do and what is the rationale. So I'm going to type this. I don't know if I can type inside of the question. So I'm going to post this link, Real Trader Webinar Special. Copy. All right, so I put it inside of the questions, and I'm also going to put it inside of the chat box. Oh, I think Kevin already did this. Perfect. So for $17, you can get access to our realtraderwebinars.com Tradespoon special. And I think this is a great opportunity for $17 to try our system. You get 30-day money-back guarantee, so there is no risk to you. And I think some of the tools and some of the daily recommendations that we have, there's no other service out there like us, because we do provide real-time predictions for key support and resistance levels are, and we actually manage a real portfolio with our own money that we give you access to, and you can follow every single trade recommendations. So I know I'm kind of running out of time. There's only 2 minutes left. So just wanted to see. So Terry, where can we get this? Yeah, if you go to Real Trader Webinar Tradespoon Special. So let me go back to the PowerPoint. So this is the offer. If you go to realtraderswebinar.com Tradespoon Special, this is the special where you can pay $17. You get over 90. You have over 80% discount. Our regular price is $97, so you only pay $17, and you have access to our system. You can try it, and you have 30-day money-back guarantee if for some reason this doesn't fill your profile. So some of the questions. Bill, what is the slippage in a trade? Usually the slippage is 5% or less on any given trade. Eddie, thank you for the feedback. Commissions, KB asked about the commissions. If you watch our nightly videos that we have here, let's say for Monster Beverage, if you go back here and look at our instructional video, you can actually see that we do have a relationship with Trading Block. And we are showing you the commissions that we are, how much commissions we're paying and how much commissions you can have if you open up account with Trading Block.